Hi, I'm Sam Meredith. Indonesia's interest rate decision was announced this morning. So joining me to discuss the decision and the economy overall is lead economist with Oxford Economics, Oliver Salmon. Firstly, Indonesia's central bank has kept its interest rate at 7.5%, as many had expected, though inflation has been elevated in the first half of 2015. Were you surprised by this decision? And what is your assessment of the Indonesian economy at this stage?
Bank in Indonesia did again held interest rates at 7.5%, which was as expected, despite the state of the economy now, which is kind of somewhat in the doldrums. Bank Indonesia, they've maintained a tight monetary stance since 2013, when it was forced to defend the rupiah against large-scale capital outflows. They have been relaxing macroprudential rules recently, for example, in the housing market and also in vehicle sales as well, to try and stimulate the economy. But they have a dual mandate to reduce the current account deficit and ensure price stability. So we don't see them providing any greater support other than what they've really been doing so far. Inflation remains elevated. It's certainly above the target range of 3 to 5%, following the decision to scrap fuel subsidies at the beginning of this year. So inflation is above target, and the current account remains in deficit. So while these two areas are as they are, we don't see any further policy support coming from Bank Indonesia, despite the fact that we have seen economic activity rather depressed at the beginning of this year.
President Widodo has spoken recently that the economy's reliance on exporting raw material commodities is no longer sustainable and the country must change its path. How are you expecting the economy to perform as the president looks to create a new economic cycle?
Well, absolutely, Indonesia does need to diversify away from this kind of over-reliance on commodities, which account for around 60% of good exports. Prices of some of their core commodities have declined in recent years, and they've been compounded by the slowdown that's currently ongoing in China. And so prospects for a return to some of the high prices of old look very slim. So the president, in doing so, has been looking to diversify and place a greater emphasis on manufacturing, on investment, and also on consumption. Now, one area where Indonesia really does need to improve is in infrastructure. And after slashing fuel subsidies at the beginning of the year, the government initially announced a significant and very positive public investment package in the 2015 budget. However, implementation has been very poor to date, and there are concerns that money will be tied up in inefficient state-owned enterprises. So as a consequence, GDP growth has very much slowed in the first quarter and has hit the lowest level since 2009. And if we look at recent data, it really suggests that the economy continues to struggle for momentum. Now, over the medium term, we do expect some improvement in this area. And we do expect the government to start releasing funds and really pushing ahead with infrastructure investments. But without this requisite catalyst from the government, not only through infrastructure investment, but also continued structural reform, trying to improve the operating conditions for businesses within Indonesia, we won't get the kind of the support from the private sector that the government has really courted in kind of recent messages. And so far, without this, you don't see Indonesia able to diversify away from this reliance on commodities and mining and create this new economic cycle that it really desperately needs.
Since the US Federal Reserve has started to focus on monetary tightening, the rupiah has been depreciating against the US dollar and continues to be a concern for Indonesia. With this in mind, which key indicators can we look out for that are likely to impact the economy?
So I guess there are a few both external and domestic factors that we're really looking at the moment in terms of economic activity in Indonesia. On the external side, there are a significant number of factors at play, not only obviously in Europe, but perhaps more importantly for Indonesia is China. So it's really important to follow some of the latest indicators coming from China. We're very concerned over what might be a sharper slowdown in domestic activity in China than is anticipated, and hence what the impact of this on commodity prices and overall import demand from Indonesia. Now, this would have a clear impact on the current account deficits, and which would increase vulnerabilities and investor concerns, which might fuel a further depreciation in the rupiah as we look ahead. Domestically, some of the indicators that I'd be looking at include the manufacturing production indicators, or PMI index, for example. They've been quite poor of late. So we'd look to see whether there is any kind of pickup on this side, both on the export side, but also on the domestic side, which might give us some suggestion that the domestic economy might be picking up and ease concerns over both growth prospects in general, but also some of these external risks that we're seeing.
Thank you, Oliver. Be sure to check back with Dugoscopy for more updates throughout the week. Goodbye for now.